So the market insanity continues. Tomorrow is expected to be one of the most volatile and rewarding days in terms of 2022 for these options that are going to be expiring today. So with that being said, guys, there's going to be some crazy opportunities with this volatility. What I'm going to be sharing with you in this video is I'm going to show you how I'm planning to trade the best setups at the best prices. I'm going to show you when to be bullish, when to buy the call options, when to be bearish, when to buy the put options. In terms of my day, I'm going to be recapping that towards the end of this video. I had a very rough start. I ended up buying puts on SPY and on SOFI towards market open, got crushed on them, gave back yesterday's profits. But with that being said, I came back very strong. And I hit forward put options with size, and a lot of you guys did your thing and you chose other stocks because you recognized there was other opportunities that were more rewarding percentage wise, like with SPY, like with Amazon, like with Piton. You guys did your thing, absolutely crushed it. I made a strong comeback, still a little bit red on the day, but overall I came back strong, and I'm really proud for those of you who've been self-sufficient, doing your own thing and crushing it, because I've seen the results and the consistency with some of you guys. It's absolutely insane in terms of the results that some of you guys have been getting. So with that being said, let's get right into the video lesson. We're going to start off with the stock analysis. It's going to walk you through when to be bullish, when to be bearish. We're going to be going over the SPY. We're going to be going over DWAC. We're going to be going over AMC, Tesla, SOFI, PROG, Amazon, Netflix. The opportunities in this, I'm telling you guys, make sure you stay to the end of the video. There's going to be some phenomenal opportunities within this video preparing you for the market for tomorrow, and also preparing you for next week with potential swing trades. And then towards the end of this video, I'm going to be recapping the mistakes I made in the morning and then what I did right midday. I had the right thesis in the morning. It was just too premature of an entry, but overall still bearish on the macro. And in terms of the macro, guys, I've been crushing it on the macro side. So in terms of like the really killer macro trade, it was the forward leap options. In terms of, options, I do day trading. I also do swing trading, mainly focused on scalping. And in terms of leap options, I'm not trading with my full portfolio when I'm trading options. So what I'm doing is I'm sitting on cash, and I'm not interested in investing at the moment because I believe stocks are going to lower. So I have a lot of money sitting in cash, and what I'm doing with that money is I am swing trading with it. And I'm also looking into mid to longer term swing trades, the leap options. This was the first leap option trade within Trader Society. It was a forward put option on January 12th. I ended up getting it at $1.84. 24 strike, expiration March 18th. Still writing these out. They're currently worth $3.18. These contracts have nearly doubled in such a short period of time. And these are leaps. These are something I'm really trying to kind of hold out in the sense. So in terms of my bearish macro trade, you guys know I've been bearish on the bull trap in that sense. I went with the forward leaps, went very heavy on those. In that sense, the main reason why was, the market's been getting crushed. A lot of stocks have been getting destroyed. But as that was happening, Ford was going up, pushing for new all-time highs. And I'm like, I want to play puts at key resistance. So what this was a gift, and it was a delayed reaction. These stocks tend to follow SPY, but sometimes they have delayed reactions. And if you could see that and capture them at their key resistance levels, also the squeeze indicator, as soon as it's turned dark blue, that's when the, squeeze is done. Like, see how it's teal and it squeezes, see how it's dark blue, it sells off hard. As soon as that triggered, man, had a massive sell-off. So guys, this is going to be the number one opportunity as of now that I have for you. It's going to be a quick scalp. So it's going to be a call option with a very tight stop loss, because you have to be very careful. So in terms of swing trading calls, like I said, there's been no confirmations to buy and swing trade any of the stocks that I recommended at their key levels. They've only been scalping opportunities with tight stops. In terms of swing trading, we need a bullish candlestick on the daily. Everything's been red, bearish on the daily with bearish candlesticks. No confirmations on the daily. People investing right now, they're getting slaughtered. People buying and holding stocks, buying and holding call swing trading, they're getting slaughtered as well. I'm not doing any of that. I'm put focused. The macro trend is still bearish. We're going to get into SPY here, but this is the number one play. It's going to be a scalping trade, and it's going to be a forward call option. So see how there's a gap to fill on forward at 2177. Look what happens when that gap fills on forward. As soon as it hits 2177, it reacts as support in the pre-market, it starts to bounce. Then it comes back down to pre-market lows, it starts to bounce. It has a gap close reversal, and then it explodes up, and the call is absolutely printed. So with that being said, Ford is now at a much oversold level. It's currently at 2115. And what I want you to consider, I'm telling you, this is like the number one play. There's a gap to fill right here at 2077. It's extremely overreaction and oversold for the micro. Like I said, things are still bearish for the macro, but for the micro, for the quick in and out day trade, that's what the micro is. The macro is the bearish overall sentiment. So for the micro, what I'm telling you is this is your key support level where you're going to want to considering buying once you see a bullish confirmation, consolidation, a small bounce, whatever confirmation you use when buying the dip, right? Consider it at 2077. We should see some sort of bounce at 2077. So if you see it holding up, you see it consolidating, you see it breaking out towards this level, buy the calls, ride this back up to like $22.30. Those should print, right? So I want you to keep in mind in terms of options, the contracts are going to be extremely volatile and extremely cheap tomorrow as they're expiring. Don't trade. If you're going to trade the riskier options that expire the same day, do not trade them past 11:30 p.m. The theta decay is just going to be way too crazy. Also, the losses and wins will be much greater. The returns are going to be much greater both ways, meaning, percentage-wise, you're going to lose more if you lose, and then on the win, you're going to make more than you win. So put in less money, size in less than you normally would. Let the percentage returns do the work for you. Don't let your money do the work for you. Let the percentage returns do the work for you. That's key. And that's if you're trading the more volatile, riskier options on Friday. So that's what I want you to focus on for forward. Focus on the gap close reversal. We had a strong gap close reversal today. Very nice run up in the morning. Do the same thing. Rinse and repeat. The gap close reversal strategy, scalp on forward. You see the bullish confirmation at 2077. Ride it back up to like 2230, right around there. So that's the number one scalp that I'm looking at. That's a scalp from the macro, still bearish on that. Also, for those of you who are holding the leaps, start considering to lock in some profits tomorrow. And if you want to let a little bit ride, that's completely fine, because the way things are looking with this market right now, it looks like we're going a lot lower, but definitely lock in some when we fill this gap. So that's the play on forward. Call options for a quick scalp. Use a very, very tight stop loss in market conditions. The max risk on that is 2040. So you're getting in towards 2070. The max risk is 2040, right? You have to stop out quickly at these levels, because if those key levels turn into resistance, it's going to be a hard sell-off. Just like how SPY turned the key 455 into resistance, hard sell-off. So the next one is going to be PROG. PROG had a 1 cent gap fill right here at 135. It partially filled it. It hit 136 and then it bounced to 150, attempting to fill the gap that was waiting to fill at $1.70. So with that being said, and the way the market is looking right now, I want you guys to stay away from PROG. I'm going to be buying this one. The time to buy is going to be at $1.08. Within time, this will go to $1.08. Yes, there is a possibility it can rip to 170 before that. But guys, I'm telling you, with the way things are with this market and the way things are right now, just wait till $1.08. That's where we're going to see a nice little 20% plus spike on PROG. So that would be the time to buy it for a scalp and a short-term swing trade potentially, right? So that's what to look for on PROG stock. Remember, for swing trades, confirmation comes in towards the end of the day. If it's a bullish trend reversal candlestick at the end of the day, it's a swing trade. If not, and it's red, then it's not a swing trade. So swing trades aren't confirmed until end of day. So if you're in on a trade, just understand it's a scalp until then. And I'm not holding my scalps till, end of day. I'm typically getting in, I'm getting out, locking in my profits. Then if I see the bullish confirmation on the daily, then I can look to rebuy the calls, playing for the next day and simply not making any profit on the swing trade the first day I get in, more playing for the next day. So I'm using a confirmation on swing trades, right? If I didn't use those confirmations on swing trades and I would have played those gap close reversals on all these plays at key levels, I would have gotten destroyed. Like, they didn't work out on the swing trades. That's why you have to use confirmations. That's why I wait towards end of the day to use confirmations. Before then, these are just day trades. So SOFI. I think SOFI is setting up for a put option. So this is something that's at major resistance while the market is selling off. You just had a massive spike in volume. So in my opinion, I don't think we're going to be able to beat this 286 million volume. So with that being said, this can turn into a BBIG for the short term, where BBIG has a massive pump up, and then the day it tops out on the volume, right here's the day where it tops out on the volume, it gets absolutely crushed. I think SOFI is setting up for something like that. And in terms of the price target, I think we're heading towards 1371 to fill this gap. That's my target. And then we see how it reacts from there. So in terms of put options for this one, your best price is going to be the previous closing price at $15. If you see 15 struggling tomorrow, it's reacting as resistance, you're going to want to play puts on this one. If it pushes above, reacts as support, it's going to be on track for another run. I don't think this is going to be an easy play. It's fairly strong at the moment, but if the volume's coming in light and it's struggling at 15, I would consider a put, ride it back down to 1370. So I'm overall bearish on that one. Just know for the bulls to remain in control, it's make it or break it. 15 must turn into support. You see it struggling, it's looking weak towards that level, buy the puts. So that's my thoughts on that. So kind of when the market is selling off very, very hard, and things are towards key breakdowns, I'm looking for plays that are towards resistance that overall follow SPY. They're just delayed. So kind of like what I did on Ford, that's what I'm looking for. I'm looking for like the next play that's kind of at key resistance that overall follows. MU did very, very well as well. I didn't do these, but I recommended these as well. The MU leaps. This was such a classic key resistance, quintuple top, bearish confirmations, history repeats itself. Like MU is going to get slaughtered macro. Same with Ford. They're way too high. So with that being said, leaps will print. Now the next stock is going to be Tesla. So for Tesla, you guys know I've been bearish from a macro point of view, telling you guys to wait for the gap to fill at 938. With that being said, guys, in terms of Tesla stock, this is barely down while the market's getting slaughtered. These are very, very good signs. When we fill this gap at 938, we should see a strong gap close reversal and a strong push back up to $1,000. The calls should do very well. My number one play is a Tesla call option. When it hits 938.53, look for the bullish confirmations. That's a day trade. In order to swing trade it, it must close green. So what you can do is you can have two different contracts. You can have contracts where you're going to day trade, and you can also enter in contracts where you're looking to swing trade. And if it closes bearish, then you step out. Whether it's a small win, small loss, you step out of the swing trade, you don't swing it, sit on the sidelines, and then you'll also have the nice profit on the day trade because you got in, you got out. So in terms of Tesla, 938, oversold, gap those support level. It should explode up from the level. Tesla is known for bottoming towards the low 900s. It's known for having strong gap close reversals. That is something where it would be my full confidence number one play. Only thing is, so that's like a household play. Only thing is we have earnings coming up. I don't like holding through earnings. I don't like YOLOing through that. If you hold through earnings, it's basically a lotto play where you're either going to lose like 70% plus, or you're going to hit nicely, or it's just going to be a complete dud. So I really don't like the idea. My trading style, it's more focused on control rather than, so I like to put the odds in my favor. I like to be in as much control as I possibly can be. I don't like being out of control. I don't like playing a coin toss. Like it could be great earnings, but the stock can fall. So I don't like playing that. I like waiting until after the earnings. So we'll see. We got to see if it can fill that gap before earnings. If not, then we got to see how this reacts after earnings. Earnings can potentially mess up the entire play. So we got to see, if it can happen before or not in terms of the gap fill. So for AMC, this is another play I like a lot. I have faith that we're going to see some sort of nice spike when it fills the gap. So there's a gap fill right here at 1641. AMC has a strong history of bouncing once it fills the gap. There was a gap here at $30. It filled the gap. It exploded up multiple times. There was a gap to fill here at 26. It filled the gap. It went to 34. It has a strong history of bouncing at key support levels of key gap fill levels for gap close reversals. So what I'm thinking is in current market conditions, like I said, for the micro, 1641, scalp the calls. And then if it closes strong, then you can look to swing trade it, right? So just understand for swing trading, it must be a bullish candlestick on the daily. It must have a decent, strong close. It must be at least green. Ideally, you want to see bullish trend reversal candlesticks, the bullish pins like these. These are the best confirmations, also the dragonfly dojis, right? So just understand it's not a swing trade and it's not a confirmation on a swing trade until the market's about to close, because that's where we know what the candlestick is going to look like on the daily. So before then, it's just a day trade. But that's going to be the best play for AMC. That can happen as early as, it's a possibility for tomorrow, unlikely, but it is a possibility. That can happen as early as next week. So that's another top play on my radar. DWAC stock. So what I'm thinking for this is, I'm thinking a midterm option on this one. Overall, I'm bearish on DWAC. I think we're setting up for a put opportunity where we kind of just hold this one out passively a bit. In terms of where I think we're at on the chart, I think we're kind of setting up for something like this, where it has this big move up and then it forms this pin right here. And then I think what we're seeing is something like this, where it's just kind of stagnant and it has small spikes up, but from a macro point of view, it just sells off. That's where I think we're at in terms of DWAC stock. So I think for the short term, it's going to be a little choppy. We're going to see some spikes back, but from an overall macro point of view, where you give yourself some time on these contracts, stay in the money, we're definitely heading back to fill this gap below at $70.88. Most likely going lower. Once the gap fills, if it reacts as resistance, very, very bearish, going to continue to go lower to 60s. If it reacts as support, it's going to push back up to 80s. But the target for this is $70.88. Looking for some sort of midterm put option on that, as I do believe we could see some short-term choppiness and short-term spike. Play it safe, get a midterm put, stay in the money. So in terms of Netflix got absolutely slaughtered after earnings here. Let's see. Okay, so in terms of Netflix, this took a major hit. This went all the way from 405 to 510. With that being said, this is currently at 405. So let's see where we're at in terms of the overall chart here. Let's just draw a line real quick to get an idea. So 405 is sitting right here. So we're at some key critical support. If 405 cracks and turns into resistance, we're going to be on track to go to $375. If this can hold up and turn into support, it's going to rip up tomorrow. So I want you to focus on how Netflix reacts towards 400 or 5. It's make it or break it. With that being said, I would not play a put on this one because it's just too oversold. So I would just avoid it on the put side. And if you see it reacting bullish at 405 or 375, then you could look to scalp a call. So when they're too beaten down and too oversold, you want to avoid a put for the time being because it's just such a key breakdown level and the put's already printed so much. Plus it can spike back very, very quickly. Like it's an overreaction. The best thing you can do is when the stock market is in a macro trend where it's bearish, best thing you could do is on a huge sell-off like this, wait for them to push back up to the previous closing price. Those previous closing prices, so we saw an overreaction on the downside. So what I'm telling you is if the market's bearish from a macro point of view and you see a stock gap down, right? So it's gapping down, right? Has a massive gap down or just has a massive sell throughout the day. One thing you can do is you can look for another overreaction. So say it just rips back up very, very quickly. That's going to be a gift to buy a put. Once it goes back to the previous closing price, this blue line, and reacts as a resistance level, then it gets crushed as a reversal. Those are the gifts. So look for opportunities where, okay, the stock market's bearish, macro's bearish. Let's play puts at resistance towards the previous closing price once the gap fills. That's the best thing you could be doing right now in terms of day trading. So write that down. So like, for example, in terms of the SPY, when SPY is having these massive gap downs, focus on put options at the previous closing price. That's really what you want to do. So in terms of the SPY, guys, this is where we're currently at. 455 is a key. 450 to 455 are key support levels with huge upside where it's just rampant for new all-time highs. Things are great, right? So in terms of the SPY, we have now cracked through such bullish level. We're talking about 449. That's our key level. We're going to call it 449 to like 450, right around there. We've cracked through it like it was nothing. It went all the way down to 442.57. So with that being said, this is extremely, extremely, extremely bearish from a macro point of view. So focus on scalping puts at key resistance levels. Your new key resistance is going to be 450 to 449. In terms of your best price, like 451.75 at this point. With that being said, from a macro picture, the SPY is on track to go lower in time. One possibility, but very unlikely, is where we see something like this, where, you know, you have these big red days coming in, you have these big red days coming in, and then one big green day steps in, and then it holds support, starts to form a bottom. Once we see something like this where it consolidates for a couple of days, it finds its base level. It still hasn't found a base yet. It just keeps cracking through. But what I'm saying is once we see some sort of base, some sort of consolidation for 2 days minimum, then we could see a strong push up. As of now, though, we don't have that. So for calls and swings, you just got to sit on the sidelines on the calls and the swings right now. You know, for swinging calls, you got to sit on the sidelines still. But as now, from a macro point of view, since we don't have that confirmation, there's a gap to fill at 442.5 right here with huge upside. There's also a gap to fill right here at 435. So this is what I want you to understand with the SPY. If we crack 442.5, turn that into resistance, this is going to continue to sell off hard and go to 435, which would be a phenomenal buying opportunity. Now, if SPY can hold this 442.5 level, if this can hold up, we're ripping back up to 449 tomorrow. So what I want you to understand is this is your key level. If it reacts as support, starts to break out, looks bullish in the morning, it's going to rip to 449. If it breaks down and reacts as a resistance, you're looking at 435, which would be the absolute best price. Now, in terms of micro trading, this is a phenomenal level to consider calls for a quick in and out trade. Just know, though, with the way things are looking, we got to be very, very careful. But we could see something like this, you know, where it just has this big red day like it did today and then just pushes back up. We could see something like that. In terms of swing trading calls, we have to wait for a base to form. Right now, the market is still very, very bearish from a macro point of view. We're on track to go lower. In terms of, you know, it's just, I'm mainly focused on seeing how we react. It filled the gap towards, you know, it filled this gap right here towards extended hours. So we just got to see how it reacts towards this level. If it keeps holding up, it's going to rip in the morning. It's going to rip right back up into the morning. Not much resistance at these levels, just a hard sell. So just understand from a micro point of view, the puts had an overreaction. So for the micro, we're due for some sort of spike. The way I would see this in terms of a gift, this would be like the ultimate gift for tomorrow for calls. We see a crazy morning panic where SPY cracks through 442, goes to 435, and that happens very, very quickly, like by 10 a.m. Stocks like to have short-term reversals around 10 a.m. So if we can get like a morning panic and then a bullish confirmation at 10 a.m., the calls are going to print for the short term. So that's an idea to keep in mind. That'd be like the best way to play it on the call side. If we can get a morning panic, quickly buy the calls, ride it back up, quick in and out. In terms of the put side, just focus on key resistance. Do not get suckered in like I did in the morning towards a key support level. Focus on key resistance level. Your key resistance level on the SPY is 451. I wouldn't be focused on micro scalping puts at key breakdown levels when they're having such an overreaction. Wait for the big spike up. In terms of now, from a micro standpoint, I would hope for a morning panic and then look to buy calls at around 10 a.m. in that sense and ride it back up a bit. So just be very, very careful. Like I said, in current market conditions, avoid short-term puts at key breakdowns, key resistance only. And then for calls, best support levels possible. You know, calls have been really taking hits. It's likely that like calls are more towards like market open, and then towards midday to end of day, things are likely bearish. That's how things have been playing out. The last one is going to be, let's see, Amazon stock. Then we're going to recap the trades here. So in terms of Amazon stock, you know, for this one, I'm still waiting for some macro confirmation to buy calls. I literally sold the calls towards the top. I bought Amazon calls, did well, and those literally got out towards the top on those. With that being said, for this one, at this point, I'm waiting for 2,871. So I just want you guys to understand from a macro point of view, we're still bearish. Stocks are still, you know, on track to go a lot lower. We're not seeing any consolidation. We're not seeing any sort of price channel. So there's no reason to swing calls yet until some sort of price channel develops. From a macro point of view on this market, I'm still very bearish. Investors and swing traders, who are buying are going to continue to get hit from an overall point of view. In the longer term sense, I've been kind of focused on leap put options at key resistance levels. So with that being said, let's quickly recap the trades. I want to give a huge shout out. Those of you who've been self-sufficient, doing your own thing, taking advantage of these lucrative opportunities with the puts, using the stock analysis, using the strategies, trading on your own, being self-sufficient. Huge shout out to you guys. You guys have been crushing it, man. We got some people in here getting some phenomenal results. This guy, I remember he was up like 8,000 on PT on puts in and out. Now he's up 18,000 in and out again with PT on puts, absolutely killing it. SOFI and SPY puts, I mean, it's legendary that you made money on those in the morning. That's like absolutely phenomenal. I ended up losing those in the morning, but then I had a nice trade on forward puts towards key resistance, made a lot back, but still red on the day. But yeah, huge shout out to that. That's incredible. We had a very nice 92% on SPY puts, literally from the peak today. Huge shout on that. You guys are $3,800 profit. That's 10 times more than the cost of Trader Society. Like, that's amazing in just one single day. This was like the trade of the day percentage wise. This guy absolutely crushed it. He was learning his trades real time. He was up 200% on these Amazon puts. He kept riding these out. He had one contract at $1.20. Imagine putting in $120 into an option trade using these strategies within the program, being surrounded by these people. Like, he was learning these real times, calling these out. These exploded. He ended up making a 1,200% profit return on those. That's crazy, man. Like, turning $120 into 1,400%. That was definitely the trade of the day percentage wise. We had a heavy hitter. This guy's been doing very well as well. 125% on SPY puts, 15K profit. Another guy crushing it on SPY puts, 216%. So huge shout out for those of you being self-sufficient, doing your own thing, getting back in the game. Like, you guys crushed it, man. A lot of you guys have traded much better than me for today, and I'm really proud of that. I'm really proud you guys are doing your own thing. That's what I want to see. I don't want to see, like, if you're interested or if you're in, like, I don't want to see people blindly following my alerts. That's not the way to trade. The point of trading is to become the best version of you, to become the best version of your trading style, to learn along the way from the mistakes that you make, to learn along the way from other people's mistakes that'll save you a lot of money, to learn from others, and to learn from your self-sufficient journey as well. Please do not blindly follow my alerts, guys. That is not the purpose in terms of what I do. If that's what you're here to do, just please, like, just don't waste my time. Don't try to blindly follow anyone's alerts. Just a waste of time. So with that being said, congrats to those of you who are doing my thing. For those of you doing your thing, now let's kind of get into the recap here. So in terms of the SPY, I ended up buying puts. Well, here, let's start off how things started off. So I started off with horrific trade. It was on SOFI. I ended up buying puts on SOFI towards the key breakdown. In terms of some of the reasoning of buying the puts on SOFI, I noticed towards morning it was struggling at right here towards key resistance at 1442, and I noticed that history shows that it's just known for being the high. It's known for being major resistance. It's known for pulling back nicely. The overall trend has been bearish. See how it tops out at this key level again, and it goes lower. It goes lower than this 1290. The biggest issue with this one was the strength, the volume of simply underestimating it. The main reason why things turned out differently and history didn't repeat itself, where it just sells off, is because of the volume. Look at where it's been crushing. It's been getting crushed at 1440s, but there's no volume. Noticed how it closed fairly decent yesterday, and the volume was there. And what really killed it today was the higher volume. That was the main thing, along with the news and catalyst. So in that sense, I ended up playing some put options right around here as it was breaking down. One thing with put options is focus on entering on green candles at key resistance. The way you get destroyed is a red candle on a key breakdown. That's how you get destroyed. The premium's going to crush you. So remember that. Put options, key resistance, green candle when you're buying puts. For call options, red candle, key support. So remember that. That's really what you want to do. If you're going to do it the other way around, say you play a key breakdown, make sure the candle's green. Say you play a key breakdown, a key breakout on a call, make sure the candlestick is is red. So if you're going to do the inverse, just make sure that's very important, and make sure you're using tight stops if you're doing the inverse. One thing I would encourage you guys to do is when scalping, scalp the macro trend. So we know SPY is bearish from an overall macro point of view. So in terms of getting in and getting out, focus on key resistance and scalping the macro trend. Try to avoid betting against the macro. So in this sense, I was right for the macro. The problem is the entries they weren't good. They were key breakdown entries, and I underestimated SOFI. That was the biggest issue. And I ended up just holding too long, and it was a 70% loss. Like, it is what it is. I played a riskier contract. I knew the risk involved. It was January 21st expiration. But the biggest mistake I made on this was not getting out right here. When you see major resistance turn into support, we know this is a key major resistance level with huge downside potential. So right here, major resistance, huge downside. When you see that breaking out and then it pulls back, so if it pulls back right away, that's generous. That means you get to see. So this was a situation where this was actually generous because it had a breakout, but it pulled back right away, meaning I get to hold and I get to see, is it going to turn into support? Is it going to turn previous resistance into support? Meaning, okay, I have to step out now because that's extremely bullish. Or is it going to break down, turn into resistance? Then I can hold. It began to turn into support. When you see it having this pullback, it breaks out, has a pullback, and it starts to turn previous resistance into support, and the volume's coming in as it's going up a little bit. You step out, you cut your losses, move on. It would have been a quick minus 25%. I did not do that. This morning, I was so eager to get in at such a key breakdown, not good level, lack of confirmation, and I was so patient to hold a loss. That was the biggest mistake I made this morning. So keep that in mind, and this shares with you when to cut the loss, when the previous resistance turned into support. So that's the mistake that I made with SOFI. In terms of the SPY, shortly after getting in on a SOFI put, I played a SPY put, and I made the exact same mistake. So the reason why I played a put on SPY was because of this. 455, key gap fill level, huge upside, has reacted as resistance. And this sold off to 453 in after hours, yesterday when you're watching this 2 days. With that being said, I wanted to play it for the key breakdown. And, it's going to have a huge downside mood if that key support turns into a huge, resistance level instead of support level. So I was looking at it in the morning, right? And I'm telling myself, okay, we just had a nice pullback on the SPY at 455. That's bearish. Let me grab a put. Big mistake. It's going to be extremely volatile at market open. Give it some time to develop. Give it some time for more of a confirmation to come in. Don't just play a key breakdown right away as soon as something just kind of hits a resistance and then just pushes back up. And also, that's a key support level. Like, this was recently just a key support level. Like, yeah, it reacted as resistance first. From the macro, I was overall bearish. And then within that sense, again, I just held too long. So in terms of, okay, what is the confirmation to cut my losses on the puts? So like I said, focus on resistance. If I focused on resistance, it would have been a small loss. I didn't focus on resistance. I got in towards the lows at the time, the key breakdown. So eager to get in the morning with the market volatility. And with that being said, in terms of when to exit, it breaks out, it pulls back, then it starts to bounce. It starts to trend up a little bit. It starts to turn previous resistance into support, which was recently a previous support with huge upside potential. That's very, very bullish. That means SPY is going to run, step out of the puts, and then if you want, you can scalp a call. You can switch trends. So the biggest mistakes I made was not getting in at the overall best levels and not getting out. And not giving myself enough time for confirmation. Be a little bit more patient towards market open. Let things do their thing for a little bit. Like, I've been doing well with the SPY when it has that triple top towards market open. I literally just got them right away. And then in terms of cutting losses, you got to cut it when previous resistance turns into support. You see it break out. If it pulls back right away, it's generous. That means it's giving you the opportunity to see, okay, this can still be an opportunity where I hold, but if it bounces and turns into support, starts to trend up a little bit, you got to cut it because then it's going to take off, and then the macro short-term trend kicks in like this, and then the overall macro bearish trend kicked in towards the end of the day. So like I said, in terms of puts, focus on previous closing prices. The new level for puts would be 449 to 451. Calls could be 442 to 435. Best case scenario for call options, absolute gift would be if we see a bloodbath of morning panic at market open. I think calls should print around 10 a.m. if that were to happen. You can also consider 442 level. Just know though, you're betting against the macro trend if you buy calls right now. So that means, you're more likely to lose, and it's a short-term, quick in, quick out. Macro still bearish, right? So in terms of like more holding through, say you wanted to kind of hold through and risk more on the SPY. So like, let's say you bought a put right here on the SPY and you're comfortable with holding through a little push up. In that sense, you give yourself more time on expiration and you stay in the money. You don't go out of money. If you do that, you can kind of hold things out and let things develop for more of the macro. That's another thing you can consider doing. So with that being said, guys, those are the plays, those are the opportunities, those are mistakes I made in terms of what did I do right. I alerted puts on Ford, and Ford's been following SPY in that sense, right? So when I did that, a lot of people were picking up puts on SPY because it was more volatile. They felt it was more rewarding. They were looking into Amazon. They were looking into other stocks. I felt at the time we were on track for a crash, and we were on track for somewhat of a weak close at the time. And with that being said, when SPY was right around here at 456, I picked up puts on Ford. When Ford was right here at $22.32, at $22.30, I picked up Fords. The contracts printed, I made a quick 30%. Some people went with more volatile plays. The thing with Ford was it was a bit choppy, slowly, gradually going down, so they didn't print as much. But I went with Ford. A lot of people went with SPY. SPY printed 100% plus easily. Some held too close. I got out way too soon in terms of when I got out on Ford. I got out when this dropped towards like $22, made a quick 30% on that. Some people held too close. They made hundreds of percents on other plays like Amazon to SPY. So you guys are doing your own thing, and that's what I like to see. So please be self-sufficient focused. Please be education focused. Do not come into Trader Society thinking you're going to be making money just blindly following my trades or blindly following moderators or someone else's trades. Please do not come in with that mindset. That's not who I'm looking to attract. You guys have been very supportive, and I really appreciate that, and I'm glad you guys are doing your own thing. You're learning your own trades. You're doing your own thing, and a lot of you guys have been really crushing it consistently. So I really do appreciate the support. With that being said, let's try our best to finish strong into the market open. I'm still up fairly nicely on the week with green. That Ford leap really put me in nicely into the year so far. Like I told you guys, this was a bull trap. I was bearish for the macro. I was looking for some leaps to go with. I went with the Ford leap, went fairly heavy on those, and that was like 100% Bain or narrowly. And within time, it's on track to go lower. It's just going to take time. So with that being said, if you do want to be a part of Trader Society, you get to trade live with me every single day at market open. That would be the biggest benefit, where you get the live real-time stock analysis. You also get my real-time stock analysis, live on spot. You can ask me questions also within the chat room. And you also get access to the video lesson library, where you get, access to the educational video lessons on the technical strategies on how to read price actions, the stock analysis. So if you like my stock analysis, I can give you that ability to where you can learn how to do it on your own and become self-sufficient in that sense. I'll teach you how to read the price action, and the live trading sessions are going to help you out a lot with the price action in real time as well, in terms of how to understand micro trends, macro trends, when to be bullish, when to be bearish, when to buy calls, when to buy puts. You also get access to one-on-one direct messaging me, where you can, add me as a friend on Discord within the chat room, send me a direct message one-on-one in that sense. So yeah, there's a lot to it. If you are interested, make sure you click the first link. I will see you guys tomorrow live at market open. Oh, look who decided to join me. This is the cat Milo. He just stepped out of the camera. But yeah, I will see you guys tomorrow live at market open. Looking forward to trying my best to end this week on a strong note. Until then, I will see you guys in the chat.